We're talking gold and silver in a Trump world with the managing director of CPM Group, and he's also a speaker here at the show and no stranger to Kitco News. Jeff Christian, welcome back.
Thank you. Thanks for having me back.
Well, we're going to start talking gold, then we'll talk silver. I have a copy of your yearbook, which came out a few weeks ago. But let's start with gold, because I know you gave a talk on how gold would react in a Trump world, and I give credit to you because you were really spot on. You were one of the few who said, look, gold will probably rally at should Trump win at the start, but then don't be surprised to see it come back down again. That's exactly what happened. How do you see it?
Well, from a short-term perspective, we're looking for gold. We were looking for gold to come down to 1220 or so, and it has. It came down faster than we thought it would. We're now thinking that the gold price probably goes back to 1350 over the next 2 months into January, and probably spends most of next year rising at a very modest pace.
Okay.
We think that next year is going to be a little bit boring. We've come off of a 5-year bear market. We had a good rebound in the first half of this year, and we've been sort of treading water. But we think it moves modestly higher in 2017. And then beyond 2017, we think economic factors are going to kick in that will stimulate investment demand. And we expect the gold price to start rising sharply 2018, 2019, and probably reach nominal record highs beyond 2020.
Now, short term, for this rally that you say could happen, what would be fueling it?
Well, one of the things is, post-Trump, post the election, we have seen the price come off. Part of that is expectations that the FOMC is going to raise interest rates. That's really a bogus boogeyman for gold. It really shouldn't be expected to depress the gold price.
Because it's already been priced in?
Right. It's already been priced in, and any increase is going to be very small and really relatively meaningless to the attractiveness of gold as an asset at this point. What we've seen is a stronger dollar and a stronger stock market. And we will continue to see that, and that also contributed to the weakness. But we think that as December progresses and then gets into January, what you'll see is people will back away a little bit from the stock market, back away a little bit from the dollar, and refocus some of their attention on gold.
Why, though?
Well, because Trump is a big unknown. You don't know which Trump's going to show up, much less what he's going to try to do. You don't know who his coterie and cabinet and advisors are going to be. You don't know what they're going to let him do.
Okay.
And then he's going to face a lot of headwinds. He's going to face congressional headwinds, even with a Republican Congress, because a Republican Congress has radically different needs than President Trump will have. He'll face a lot of regulatory issues, and he's going to face constant challenges in the court system to virtually everything that he does, many of which is, many of his things that he said he wants to do are unconstitutional. So he won't be able to do those things, and it's going to be a very contentious period of time once he's actually in office at the end of January. And we think that going into January, you'll see a January rally. You will have the Lunar New Year in the first week of February, so there'll be demand from China coming in. And we think that a lot of other investors will be looking at gold and just saying it's still a very much attractive.
Now, we've seen in the industrial metals do well. Copper really took off on the news because they're expecting a lot of infrastructure spending under a Trump administration. Do you think that silver will benefit?
No, we think that copper is going to come off because we don't think there'll be a lot of infrastructure spending under the Trump administration. We think that that's just another empty campaign promise, and that what you'll see is the constraints of the fiscal realities of the government spending will lead to no big infrastructure build. Probably you would have seen a bigger infrastructure build under Hillary Clinton because she had Larry Summers talking about how deficits don't matter. And what we did wrong in 2009 and 10 was we didn't spend enough and bloat the deficit and debt even more. So we don't think that you'll see an infrastructure build, and I think that at some point the markets will wake up to that, and copper is going to come down hard.
Okay, so silver would and silver would not necessarily benefit either. Got it. Okay, makes a lot of sense. Jeff Christian, thank you so much for joining us.
It's always a pleasure.
And thanks for watching our coverage here from the Silver and Gold Conference in San Francisco. You can get a copy of CPM's Silver Yearbook on the CPM website. And thanks for watching. We'll have more for you on Kitco.com.